Even the biggest, most stable corporations can hit some serious, unexpected turbulence. One minute you think you're cruising at 30,000 feet, and the next, well, you're in a steep descent. And that is exactly what happened to Air Canada in the third quarter of 2025. The story of how it all went down is a really fascinating look at just how fragile even a giant can be. It just seems almost impossible, right? Just 3 days. I mean, in the grand scheme of a 90-day quarter, that should just be a blip on the radar. But as we're about to see in the world of aviation, a 72-hour disruption can trigger an absolute financial spiral. So, how in the world did this happen? Let's just start with the number that sums it all up. Negative 87%. When you see a number this dramatic, this steep, you know it's more than just a bad quarter. It's a financial nosedive that really, really demands an explanation. So what is that number? Well, that represents an 87% collapse in their net income compared to the exact same quarter just 1 year before. And let's be super clear here. This wasn't some small dip. This was a massive, massive financial event for the company. Okay, so let's really dig in and unpack the damage. To truly get a handle on the impact, we need to look at the numbers side by side. That's where you see just how this whole challenging quarter fell apart financially. You can see the whole domino effect right here in these numbers. It all started with what looks like a relatively small drop in operating revenue, down about 5%. But just watch how that drop accelerates down the line. Operating income, it plummeted from over $1 billion to just $284 million. And the net income, oh my gosh, it just fell off a cliff, from over $2 billion down to $264 million. And wow, this chart just smacks you in the face with the reality of it, doesn't it? Just look at that towering bar on the left. That's over $2 billion in profit in 2024. Now, compare it to 2025. It's just a sliver. The difference is absolutely staggering, and it shows you just how much value was vaporized in a single year. So, what on earth caused this financial freefall? Well, it all boils down to one single event. A 3-day labor strike that ended up costing the airline hundreds of millions of dollars. And man, it happened fast. On August 20th, more than 10,000 employees just walked right off the job. Over the next 72 hours, the operational impact was immediate and it was chaotic. More than 3,000 flights had to be canceled, stranding passengers, and basically grinding a huge part of the airline's entire network to a complete halt. And the price tag for that 3-day chaos? A staggering $375 million. That's what they figured they lost in operating income. That one figure draws a direct line from the picket line to the profit collapse we were just looking at. So, here's how you get to a number that big, on a really fundamental level. The strike forced the airline to cut its total capacity, that's basically the number of seats they have available to sell, by 2% for the whole quarter. And in an industry like this, with massive fixed costs, where planes cost a fortune even when they're just sitting on the tarmac, every single empty seat is revenue you can never get back. It's a really simple and brutal equation. But, this story doesn't just end there with all the bad news. As damaging as that strike was, it wasn't a total catastrophe for the entire business. If you dig into the results, you can actually find some genuine bright spots that show the airline's underlying resilience. Yeah, despite those ugly headline numbers, some key parts of the business held up incredibly well. Demand across the Atlantic and in those pricey premium cabins, it stayed strong. The super important US to Canada business was stable. And get this, if you take out the 3 days of the strike, the airline's on-time performance and customer satisfaction scores were actually positive. And this little snippet from the company's report, it's absolutely crucial. It says, booking momentum remained robust post-strike. What that tells you is that as soon as the planes were flying again, customers came rushing right back. The damage, while severe, seems to have been contained. It suggests the brand itself wasn't permanently harmed by all this. Okay, so after a storm like this, how do you plot a new course? Well, Air Canada immediately laid out its plan for the future, a really clear strategy to move past all the disruption and build a much more resilient operation going forward. So they're tackling this with a 3-part plan. First, they're modernizing their fleet, investing in newer, more fuel-efficient planes. Second, they're doubling down on what they call operational excellence, basically keeping flights on time and customers happy. And third, maintaining really strict cost discipline to protect their profit margins.
And if you want proof that they are confident, look no further than this. Despite that massive $375 million hit they took in Q3, Air Canada is still projecting a full-year profit of around $3 billion. That's a huge signal that management believes the fundamentals of the business are still really strong and that the recovery is already well underway.
And so, all of this leaves us with one big question, right? It's a powerful reminder that a company's real strength isn't just measured by its profits when times are good, but by how resilient it is in a crisis. Has Air Canada truly put this turbulence behind them? Well, just like any flight plan, only time will tell.